Hello and welcome to Global Business Insights, where we take a deeper look at the headlines from a business perspective. The gathering of major central bank bosses at Jackson Hole has come and gone. At the symposium, Jerome Powell gave the strongest signal to date on an imminent cut of interest rates next month. We will discuss other takeaways from the symposium. Pavel Durov, the Russian-born billionaire founder and owner of the Telegram messaging app, was arrested at Le Bourget airport outside Paris shortly after landing on a private jet late on Saturday and placed in custody. The arrest prompted a warning from Moscow to Paris that he should be accorded his rights. Ex-owner Elon Musk also said that free speech in Europe was under siege. Toncoin crypto token, that's a digital asset linked to Telegram Messenger, fell over 20%, losing about $2.7 billion in market value, reflecting the uncertainty sparked by the detention of the messaging app's co-founder. This week, we also get the latest read on the U.S. Federal Reserve's preferred gauge of inflation. That's Personal Consumption Expenditure Index. The core Personal Consumption Expenditures Price Index, that is excluding food and energy, is expected to go up 0.2% in July for a second month. On some of the other key data expected this week, today U.S. durable goods report for July comes out. Analysts see new orders for manufactured durable goods to increase 6.8% in July after falling 6.7% in June. Conference Board's Consumer Confidence Index for August will be out tomorrow. We get U.S. Q2 GDP, that's the second estimate, on Thursday. PCEI and Chicago PMIs come out on Friday, and Germany GDP data is also out on Tuesday. We're still expecting Nigeria Q2 capital importation report to have been out last Friday. We should get Q2 GDP for Nigeria out today. And this Friday, Nigeria's labor force reports will also be released. On earnings this week, Nvidia will post results on Wednesday. It will need a blockbuster quarter and upbeat guidance to justify valuations for tech stocks that are looking somewhat pricey again, and the need to show that the AI hype is indeed real. Nvidia is currently trading at about 47 times forward earnings estimates. According to a statement, President Liu Jin has stepped down from his leadership role in the Bank of China after less than 3 years in the job. Ge Haijiao will be acting president for the bank. Yesterday, China's Sinopec announced a 2.6% rise in net profit for the first half of the year, as rising oil prices boosted income to $5.21 billion for January to June. Sinopec, the world's largest oil refiner by capacity, saw sales fall 1.1% and also said better performance from its upstream operations offset weaknesses that they saw in refining and petrochemicals. China's Ministry of Commerce says it strongly opposes a U.S. decision to add multiple Chinese entities to its export control list over Russia-related issues. The United States on Friday had added 105 Russian and Chinese firms to a trade restriction list over alleged support of the Russian military. Apple is holding its biggest product launch event of the year on September 10, when it's expected to unveil the latest iPhones, watches, and AirPods. Welcome back. Investors are positioning more confidently for a Fed rate cut in the U.S. at its next September FOMC meeting. Last Friday, Powell made it clear that the time has come for necessary adjustments. Also in the U.S., Philadelphia Fed President Patrick Harker reiterated rate cuts should be methodical, agreeing that it's time to start the process. Pier Paolo Benigno of the University of Bern and Brown University Professor Gautier Getson both concluded that cooling in the labor market is approaching an inflection point where additional slowing could bring a much larger increase in the US unemployment rate. The risk of waiting too long and hurting the US economy is therefore elevated. For the Bank of England, which cut its benchmark rate in August, Governor Andrew Bailey said that while it's too early to declare victory over inflation, the risks of persistent price pressures appear to be receding. Still very guarded. For the ECB, which lowered rates in June, many members, including Finland's Olli Rehn, Latvia's Martin Kazaks, Croatia's Boris Vucic, said they would support another reduction in interest rates next month. But ECB chief economist Philip Lane also said the return to 2% inflation is not yet secure. Brazil Central Bank Chief Roberto Campos Neto said managing monetary policy transmission will become increasingly difficult without addressing fiscal issues, citing the growing burden of public debt driven by expanded government spending. And the IMF chief economist Pierre-Olivier Gorincha said at the annual economic symposium that the Japanese central bank can continue to raise rates gradually at a data-dependent pace. The Fed BOJ policy divergence acts as a headwind to the US dollar yen exchange rate amid escalating geopolitical tensions in the Middle East. Implications for Africa and emerging economies include lower cost of external borrowings, and easing is positive also for capital flow to Africa, where rates in many countries like Nigeria are still quite high. But larger public debt and fiscal excess will sabotage central bank efforts to tame prices. In summary, all seem to agree it's too early to declare victory over inflation, but there is enough progress to ease the tightening. The big lesson: gauging a path to inflation can be difficult, and the propensity to be blindsided by more complex geoeconomic factors is much higher than in the past, in a much more connected world. For investors, it still means the next few months are likely to be volatile, and it will be smart to ensure a diversified portfolio to help offset any near-term fluctuations with enough in safe haven assets. For the Nigerian Central Bank, there are lessons. First, the importance of data to guide the balancing act, especially data on jobs and the economy and diagnostics on factors driving inflation. Also important is the need for independence from the executive branch and the politics, and understanding the role the alignment with the fiscal side plays in monetary policy transmission and effectiveness. How will the elections in the US impact the relationship between US and China? Both parties are barking loudly against China. What matters is the bite. And while we see both parties acting against Chinese interests in terms of trade, investment restrictions, and tariffs, a Harris government will use more subtle barriers to hold China back from penetration in US markets, while a Trump government will be bolder with raising tariffs, not just on China, but also against Europe. After COVID hit in 2020, the United States suddenly understood vulnerabilities it had ignored. The supply chain for everything from pharmacological inputs to rare earth minerals depended on China, and that Beijing had taken the lead in industries that the United States once dominated, such as the production of batteries. Also, access to high-end semiconductors and industry created by American giants such as Intel turned out to depend on the security of Taiwan, where 90% of advanced chip making takes place. Since then, we've seen efforts to address these vulnerabilities, which took time to develop and would not be corrected overnight. Slowing China down and discouraging the extension of its dominance in the global tech supply chain is a top priority agenda. And of course, we know there are several excuses such as security concerns or trading with Russia and Iran that will be mentioned. According to Condoleezza Rice, U.S. former Secretary of State and security advisor, in a recent article, she says the United States is a different country now, exhausted by 8 decades of international leadership, some of it successful and appreciated, some of it dismissed as failure. She adds that the United States' global involvement will not look exactly as it has for the last 80 years, and Washington is more likely to choose its engagements more carefully, and allies will have to bear more of the cost of defending themselves than they are used to. Trade agreements will also be less ambitious and global, but more regional and selective. She also writes of the need to focus on giving more meaningful education, skills, and job training interventions instead of populist rhetoric to protect jobs. China reacted yesterday to the U.S. decision to add multiple Chinese entities to its export control list over Russia-related issues, but will be fashioning its own strategy as it observes how the U.S. approach to the external front will be reframed after the elections. A world with growing authoritarian communism, despots, and misbehaving dictators still needs America, and America still needs the world. Isolationism is never the answer, but we'll see emerging a new cooperation framework. Some are calling it a different reglobalization. Asian shares were mixed amid escalating tensions in the Middle East, with Israel and Hezbollah trading strikes. The US dollar and bond yields were retreating ahead of more inflation data this week that investors hope will lead to more rate cuts in the United States and Europe. Oil prices also climbed over 3%. Brent in early trading still under $80 a barrel after Israel and Hezbollah traded rocket salvos and airstrikes on Sunday, causing worries about possible supply disruptions. In the near term, Brent is still expected to trade in the $75 to $85 per barrel range. I expect it more to be in the 75 to 80 if the risks around the geopolitics are better managed, due to a lower prospect of a truce in Gaza and an expected retaliation against Israel. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please send your comments. Remember, we'll bring Nigeria GDP results that will be out later today, and maybe we'll also talk about some other data that will come out from the US in the afternoon. Again, thank you so very much for watching. Bye-bye.